So I don't think having a portfolio with 20% gold is unreasonable at all.
The price is climbing, and you're probably wondering if you've missed the boat or if gold is now overpriced. You're all upside down on what to do. Well, worry no longer. This video will have you the right way up in no time at all. So let's cut to the chase. Should you own gold? Yes, you should.
All of us old peasants know when things go wrong, you better have some gold under the bed. You better have some silver in the closet, because when things go bad, everybody will accept your gold and silver. They may not accept other things, but they will accept your gold and silver. It's always happened. I hope that if it happens again and we have a last gasp, a blow off for gold and silver, that I'm smart enough to sell if it gets that vigorous. I don't want to sell. I want to leave it to my children. But if we do have a wild blow off, you have to sell. You have to sell blow offs. So, but at the moment, I have no intention and no hope to sell my gold and silver.
And the permanent portfolio concept was basically a portfolio that was equally invested between cash, bonds, stocks, and gold. Harry Brown, it was a guy who coined an American writer and investor. And the so-called permanent portfolio worked tolerably well until around 2007, 2008. The problem with that cash, bond, stocks portfolio, and you simply reweight them each year annually to 25% across the piece of the portfolio. The problem with that is that Harry Brown, God rest his soul, could never have foreseen the way to which basically the credit market would become completely exploded by inflationism. So cash doesn't work when cash rates are at zero, or let alone negative. And bonds don't work for the same reason if they get to derisory rates, let alone negative yields, which we have had within the last 5 years. So the whole problem of the so-called permanent portfolio is that it breaks down when central banks
at the extremes.
At the extremes, when interest rates get too low. So stocks still have value. Stocks, per se, obviously subject to taste and to valuation, still work. And gold, I think, absolutely still has value. I think gold is the single most attractive asset, or let's call them real assets, because that's really what they are, tangible claims on the real economy and stuff like that, non-financial things.
So what I came up with was something called the awesome portfolio. And the awesome portfolio is 20% stocks, 20% bonds, 20% cash, 20% gold, and 20% real estate. And the amazing thing about this portfolio is that it returns about 1% less than the S&P 500, but you get half the volatility. So you trade off a little bit in the way of returns, but it cuts your volatility in half. And the worst drawdown in the history of the awesome portfolio is 12%. That's the worst year that you could possibly have historically. Whereas in the financial crisis, the S&P was down 38% in 1 year, and the awesome portfolio was down 9%, right? So if that's your worst case scenario in the worst economic crisis since the Great Depression, and you're down 9%, I think that's pretty good. And when a lot of people look at this portfolio, they say, like, this is nuts. Like, why would you have me in a 20% gold position, right? Like, I can understand maybe 2% gold or 5% gold, but 20% gold, like, this seems unreasonable. And the role that gold plays is it is the ultimate diversifier, right? So I kind of have an analogy for this. It's about Dennis Rodman. Okay, gold is Dennis Rodman, right? So Dennis Rodman is in the Hall of Fame, but he only scored 6 points a game. Okay, so if you had a team full of Dennis Rodmans, it would be a terrible team because it wouldn't score. But what Dennis Rodman could do is he could rebound and he could pass to other players. So when you take a Dennis Rodman and you add him to a team of 4 other players that can score, it becomes a championship team. And that's really what gold does. If you had a portfolio that was 100% gold, it would probably not be too exciting. But as soon as you add gold to a portfolio of other stuff, it brings the risk down a lot. It brings down the volatility. And the reason that is because gold isn't really correlated to anything else. It's correlated to things over short periods of time, but those correlations are unstable and they drift over time. So it is the ultimate diversifier. So I don't think having a portfolio with 20% gold is unreasonable at all. I do think a portfolio with 80% stocks is incredibly unreasonable.
I see silver as a more speculative asset, and I own some. Usually gold leads the precious metals bull market. The narrative has to be established by gold. But when silver follows through, it goes further and faster. I am a speculator. The money I now invest carefully, I made by speculating wildly. And I do own some silver. But I own a lot more gold than I own silver because I'm motivated at present much more by fear than by greed. I'm interested at these conferences to talk to gold bugs who rub their hands gleefully and chortle about the fact that gold could go to $6,000 or $7,000 or $10,000. The circumstance that would cause that would be so damaging to the rest of your portfolio and to your lifestyle that it isn't something that you should be happy about. My lifestyle's really good. Mm-hmm. And I hope, however old I am, David, when I shed my mortal coil, that right before that I look back and say, you know, all that insurance you bought, all that gold you held was a mistake. Because that means that I lived a peaceful, uneventful life, which is what I would prefer to live.
I have real estate. I have real estate in Switzerland and in Thailand and in Vietnam. And I have stocks. And I have stocks in Latin America, now quite a heavyweight, because if World War III happens, Latin America should be safer than, say, the Suez Canal real estate fund. And I have also stocks in Asia because I think that Asia is cheap. I have stocks because in Thailand, because I live in Thailand, I believe one day maybe you won't be able to remit money from country A to country B. So I want to have my own cash flow here in Thailand. Mm-hmm. I also have cash and bonds. I don't think they are good investments, but I never invest in the belief that I'm always right. I could be wrong. You understand? We could have a serious recession in 2024. So I have cash and bonds, and I have precious metals, as I mentioned, but stored in different locations, not in one place. And also my stock holdings are not all in one bank. They're in different banks, in different sovereignty. Because if you're Irish and British or UK, Australia, Canada, you're all a vassal of the United States. That's what you are. I have gold in bars and also in small coins, because when the hell will break loose, if you go to a department store, you can't pay with credit cards because they will switch off the internet and the electricity. So you need small denomination gold coins.